Hello and welcome to iTradeAIMS.net. This is Imi with another episode of the London Report. Today, the 20th of January 2022. What you see on the screen is with the banana signal, 1, 2, 3s. That what you see is the code that we call the banana indicator. It is the indicator that we use. It is very objective. It gives us more than 60% win rate, and we are very happy with it. Two of our members have got themselves funded accounts, and both of them say that they have used the banana indicator, so you can use that as well. But today what I want to show you is a signal that I took at the London Open, so let's go through it. The signal is slightly different and some of the members might be confused why I took it, so I would like to explain that. So this is the London Open over here. This is going to be a quick video. And at the London Open, I want to see where the price goes. So around this point, I asked a question. If you ask a question in the first or second minute, and you ask, okay, what is the trend of this session? The answer is very simple. Wherever it opened, if price goes above from it, the trend is up. So for this moment, the trend of this session was up, but I was monitoring other things as well. Price goes up, and as you can see, I have these ranges marked. So where did I get that range from? Well, that range was marked based on these levels up there. And what was that? If you go to the hourly chart, you'll see it was a price that reacted to this level over here. That's all there is to it, and price goes up. I saw these few wicks, and when I look at these charts, I do what I call the market cycle, which we learned from L. Brooks. And what you see here is a breakout, then a pullback, and then price. When you have two higher highs, and if you can connect them, it becomes a channel. So here we have a channel, and if we connect these two lines, we can see that it's probably not a converging channel, but still there is no strong momentum. And usually after that, what will happen is that price can break this channel and turn around. So what you see here is these two candles, very strong bearish candles, but around this time I was considering this as a trading range. So why would I go short? Especially because our rule is that I do not trade inside a trading range. Now that's wrong actually. I do trade inside a trading range, but if I want to trade inside a trading range, then I want to have other information. For example, if the longer term is a downtrend and then price happens to be somewhere near the high of a trading range, then I can go short. On this occasion, however, what I saw was that I saw these two candles of a strong impulse move, and I happened to be watching the US 100, which is NASDAQ, right? This is where the NASDAQ opened. And I've noticed that the past few weeks, and actually quite some time, the past few months, sometimes the NASDAQ would move during the London Open. And what NASDAQ produces, what you see, is the best trading setup that we have. And why is this the best? Well, what we want is a trading range. So we have a trading range here. We have a low that is equal to this, and another low that's equal to this low. So we have three equal lows, and then over here we have a few equal lows, and that high is the highest high during this time, and it's not been broken. And then what did it do? It tries to break up there, fails, turns around, and creates a strong impulse move down, pulls back two candles and gives us the best signal. I mean, if I wasn't trading DAX over here, I did actually trade this as well, but this was on this main account and the other one was on the other account. So took this, and on the US 30, well, let me take it to the US 30 as well, we had this signal. So this again was a impulse breakout and then pullback, 2 and 3. You take a trade, you set a target point, and it was hit here. So when I saw that all three indices were moving, I hit the button. This order was actually set at 1 because I went to the other chart and started putting order for this one. Otherwise, I would have deleted it and put another order for this one based on 2. So like if you look at the 1, the high and low of the 1 are the high is higher than 2 and the low is lower than 2. So that means that if I set an order at 2, I would have had a tighter stop loss, which means that my 2R target would have been even tighter. But I had belief that if it starts to move over here, we might be seeing this support over here. And I thought, okay, I'll see if it crashes through it, then I'm going to go for 3R. Otherwise, I'll see if it comes around here and doesn't go to my 2R, I might take some profit. But it was one of the best days. We had an entry on this, and it hit 2R. Actually, I had set 3R for this one, so that was 27 points. 3R on this, 3R on the DAX, and then a 2R target. Or was it a 3R? Actually, it was a 3R on this as well, but we took 2R when it pulled back, and then we took another trade because it's just simple. If you look at it, impulse, pull back, 2, 3, the hunt signal, the banana signal is there telling you to go short, and we went short. And then here, closed eyes, hit the button, sell bar here, and boom. Again, for that, for US 100 as well, we took another trade. This time we were going for 2R because, as you can see, it's second pullback, so you can't expect another 2 or 3R. I mean, even 1R would have been good. And with DAX, it was 3R, did not take this signal. The basis for not taking this signal is rule number 3, which is the impulse move to climactic? And in this, it was climactic. I mean, if it pulled back somewhere here and retested this level, it would have been a very good signal. So today it was 11R profit within the first half hour of the London session, and that is all we need. So I thought I'd quickly go over this and share with you what we did today, and I hope it was useful to you. If it was, please do hit the like button and subscribe to the channel if you're not subscribed, so you never miss another video. I shall see you in the next video.